Have you ever wondered how to secure funds you need before diving into the real estate investment market? Well, today, my guest, Edwil Antolin, a seasoned investor and hard money lender, is here to unveil the secrets behind lining up your funds for success. Edwil, welcome to the show. Great to have you here.
Thank you, Bryce. Thank you for having me. It's an honor.
The obvious question is going to be, how did you get started in real estate? When was that, and what got you into the game?
Sure, sure. My wife and I started in 2019,
Mhm.
part-time real estate investors, and real estate being so broad, we were kind of trying to find our niche. We started off with purchasing property and rehabbing them, flipping them, and then
Mhm.
also purchasing and holding them. So that's where we started. And then as I continued, I decided, you know what, I want to continue to help the community, and so I found the niche of real estate lending, hard money lending specifically also. I wanted to help people who are also trying to get started like myself in this world and trying to build an empire, if you will. I wanted to help the community that way also.
I think the big thing too is that a lot of people don't know, the average person doesn't know about hard money loans. They think that they have to save up or go to the bank, and then that's pretty much it. Those are the only people who borrow from, like their uncle or something like that.
Right, right.
Can you share some insights on your experience both as an investor and as a hard money lender? Did you ever need funds for your own deals?
Right. So we started with purchasing a property in St. Louis, Missouri. Actually, we're from California, so we did out-of-state investing.
Oh,
So
wow.
we were
You're
able
across the
to,
country.
yes, sir, we did. We did cross country. We were able to secure funding from a hard money lender at the time, and they paid for. Here's the neat thing about hard money lending: you're able to leverage or use other people's money to acquire their property. So
Mhm.
we were able to, I believe it was, if I'm not mistaken, we were able to get a hard money lender to provide 85% of the funds necessary not only to acquire the property, but also to fix it. And then
Mhm.
we were able to also speak to a couple of our friends at the time, and we told them about a transaction, and they put in the other 15 to 20% to pay for the rest, basically, including the closing costs. The bottom line is we were able to put two lenders together, a hard money lender and a private money lender, and we were able
Mhm.
to acquire the property with basically nothing from our own pocket. Yes, and so I encourage a lot of investors use hard. I know that a lot of people are saying, "Oh, hard money is expensive," and this and that, but there is a place for hard money in acquiring property in our industry. I'm here to
Yeah,
tell
it's
you
kind
that.
of like, I always look at hard money loans as like a bridge fund, whether it's
Mhm.
short or whether it's 6 months. You don't want hard money loans on a buy and hold rental property where you're going to be in it
Correct.
for 5 years. But as my mentor always used to say, access is more important than cost. If you can't get the money together, then you can't do any deal. So you might as well look at the
Right.
numbers, buy it in such a way that a hard money loan makes sense. Because hard money loans don't make sense on all deals. It's usually on properties that the bank doesn't really want much interest in,
Hmm.
or something that you've got a decent amount of equity where you can pay a little bit more than the bank. The bank is obviously going to always be like a conventional mortgage, 20% down. It's always going to be one of the cheapest ways to get a loan on it. But when you're looking at, say, a buy rent refinance project, you're probably going to need that bridge financing to get that thing up and running because the bank looks at it and goes, "No, we're not going to lend on that thing. It's going to fall down while we're lending on it." What advice would you have to investors looking to secure funding for their real estate ventures? What should they do to get ready for that sort of thing?
Bryce, that's a great question. One of the things I recommend, in fact, I recommend this to so many people. A lot of times, here's the scenario: an investor comes to me, they're already in contract, and they
Hmm.
say, "Hey, I need a loan." And so by that time, however, the clock's already ticking, right? And my suggestion to all of us, whether you're new or whether you're seasoned, is find out, get the money first, have it lined up first, so that once you get the property under contract, there's no more sticker shock. You already know what to expect. You already know the rates that you're going to have. You're already going to know the time frame. You only have 6 months or 12 months to get this project done, and you'll also already know how much money you'll need to come into the table. If you can't finance the entire thing, if you need to come with your own funds, if you don't have enough, at least investor A or B or C will help me come up with the rest. So it's night and day, Bryce, if you have your funds lined up versus getting into contract and then you have to figure out where you get your money. I definitely recommend that you get pre-approved, see a hard money lender, or get your money lined up, whether it's from a hard money lender or a private money or a combination of both, before before you sign that dotted line.
Because I mean, a lot of times you can get the money. Hopefully, you gave them more than 15 days notice, but it's not always that the hard money lender is going to give you the money that you need. You might actually come up short. They might look at it and say your numbers aren't quite right. We're going to give you 85% of what we think it is, and then you're still coming up short. One thing I always do whenever I'm looking into a new market is I call the market area and I look around at the pricing. And then I start calling hard money lenders before I've even made offers to
Right.
figure out what their lending risk in that area. Because like some parts of the country you'll call and the hard money loan might be 100% loan to value plus the renovation. And you're like, wow, that's great. You mean I can like pretty much buy property and they're going to fund the whole thing. They're like, all you need to do is have some security or pay for all the legals and they'll pay for all the house stuff part. But then you'll call something like maybe California or Florida where there's like some risk related to the market. Who knows what it is? And they're like, oh, we're only going to do 80% loan to value and we're only going to finance the house because the amount of capital, especially I was calling into Florida and they're like, sorry, we cap out at a hard money loans at like 1 million. And I'm looking at like a $2.5 million property to flip it for 4.5. And I had to find, I'm like, who do you know? Because there's always a hard money lender for that. I had to step through this, that, and the other to get towards a hard money lender that could actually provide. But surprisingly, after like 2 or 3 phone calls and asking for the referral on the no, I was able to find a hard money lender who was like, we do everything that the under 1 million people don't do. We're going to lend on up to $2 or $5 million. So when you're looking at the whole lending side of things, how do you process and identify whether or not the deal they're bringing to you is worth investing? Because like as an investor, let's say I already have it under contract and all that, I obviously think it's a deal. But then I bring the paperwork to you and say, Edwil, I need 85% loan to value and I need 85% of the renovation. And then you do your thing and it's like, well, I don't agree with XYZ. So how do you guys evaluate a property? An investor like me can kind of understand the mindset that goes into evaluating whether or not you're going to loan to me.
Right, right. What I do, Bryce, is I provide education. I
Mhm.
let the borrower know, hey, this is what you can expect. These are the numbers you provided to us, and because I'm sure you did some sort of homework, some sort of due
Yeah.
diligence. But I let the borrower know that the lender is the one that's going to make the final decision. For example, if you say that this property has an ARV of 300, well, that's great. But what's going to happen is the lender's also going to do their due diligence, and in the end, they're going to give it their number. What I
Hmm.
do, Bryce, is I educate the borrower to say, hey, Mr. and Mrs. Smith, if it goes below, if the lender says the ARV is below this, then this is what's going to happen. If it's above it, what then we're great, right?
Hmm.
I educate them, the borrowers, on what can possibly happen if the numbers don't come out correctly. Bryce, I don't necessarily deny or approve a loan. I just simply let the borrowers know that, hey, this is the scenario. We're going to provide it to this lender. These are the lender's guidelines. Just be aware that if this happens, then XYZ might fall into place.
And so then I guess you've got multiple people that are lenders. And if we don't get it over here, then you're essentially like brokering the money from somewhere to somewhere, right?
That's correct, Bryce. That's the neat thing about working with us at Rapid Funding Solutions. We are a lender, but we also have a part of us that allows us to reach out to correspondent line. Like what you said, if it doesn't fit our guidelines here, we can always go to lender A, B, C, and D. We Gosh, we service just about almost every investor out there. If you have a low credit score, we can help you. If you have you don't have a lot of funds to invest because you need a high LTV loan, we can help you there as well. If we can always find an avenue for you if you're trying to buy something in the rural areas. A lot of lenders
Mhm.
don't do rural areas, but we can find
Yeah.
somebody that can. We're flexible, and that's what we offer to investors is that one-stop solution. You don't have to waste your time with 4 or 5 other people. Just go to us, and we will find the source for you.
So when you're looking at the different, say I needed a really big loan, I need a
Mhm.
huge multifamily property, I don't know, $5 million. How do you navigate these larger bids on someone who, like, does it matter so much about the person or the property?
Most of it, Bryce, the majority of the decision making is based on the property itself. The borrower's credit score does come into play, but the biggest thing is the property itself. The lender, of course, is going to do a valuation on the property because in the end, if something happens, that property is gonna end up falling on their laps. It's all about risk. Bryce, you mentioned earlier
Mhm.
about a lender not lending in this market or that market. Even though let's say you're a terrific credit score, you've got a lot of experience. If you're buying in a market that's currently undergoing a lot of turbulence, a lender may decrease their loan to value. Instead of a higher, let's say 85 or 90, they may increase it down to 65, not because of you, but because of the market that you're in.
Based on what you're seeing out there, the market is, I wouldn't maybe use the word uncertain. We're kind of in a certain phase in the market position right now that people thought would be temporary, but has now turned out to be relatively stable. I guess that's good or bad. What do you see on the horizon as far as for investors looking at getting into properties? What's the feeling from the lenders that you're getting as someone who's seeing maybe people not getting a loan or getting loans where you thought, oh, that I didn't think that was going to go.
Yeah.
What's the feeling out there on the lender side for this kind of like what they think the market is? Because like as investors, we're always excited. We're always like, next deal's right around the corner. Let's get some hard money. But I've noticed that the lenders have pulled back. They're not lending as much. People are like, I'm gonna go and take my money. You know, the hard money loan I had, the guy's like, oh, I'm gonna take my money back and put it into some other asset class. What are you seeing out there?
Yeah, I'm seeing stricter guidelines when it comes to lending, only because, like you said, the times are a bit uncertain.
Hmm.
But then also, I've seen investors continue to purchase, continue
Hmm.
to do fix and flips, and really, it's all about the profits are when you purchase. Just a word of caution, everyone, just make sure that your numbers are good, and if your numbers are good, it doesn't matter. It doesn't matter. You will find the money. There will be lenders that will lend as long as the numbers make sense. If the numbers
Hmm.
don't make sense, then that's where things fall apart.
Tell me what would be an example the numbers don't make sense.
For example, if in fact, I'm dealing with this one gentleman right now. He gave me a scenario of his ARV, and then the lenders came back and said, no, that we don't agree with that. And so I went back with him and I asked him, hey, let's take a look at your comps, right? This is where the education part comes in as a lender. We took a look at his comps, and some of his comps were like a mile away, 3/4 of a mile away, and we did a little. We looked
Nah,
at the subject proper little map, right? We drew a line, and then I said, you know what? This is where the education comes in. This is why the lender did not approve you because of the fact that the comps you said were outside this boundary, like it crossed a freeway, that sort of thing. And right away, that tells you it's in a different neighborhood.
nor
Yeah,
across a freeway is a different thing. Across a river is not the same thing.
not the same. Exactly,
And
exactly.
we were having that same conversation in one of my group chats about spring numbers versus fall numbers. What's the real ARV when the market is hot and you're getting numbers from the realtors? And I said, just be careful, guys, because sometimes realtors omit low numbers to make their case to sell you a property. And sometimes people will do their own comps and they'll get a biased opinion about what they're like only looking for things that support their case. And then what's
Right.
the lender going to do? They're going to open up the box, do the exact same comp work and say, these are the other ones. The ones you omitted are the only ones we're using because they're like they're the flippers like very like risk they're not feeling so much fear. And the lender is like maximum fear. Like, I'm not lending my money out unless it looks like a deal on paper.
Right.
What can investors do to make that decision easier for the lender? What sort of things can they put together, or is there just really nothing but like an address and my credit score?
No, investors can help the lenders out. Well, the lenders are going to do their due diligence no matter what.
Yeah.
No matter what numbers we throw at them, no matter what
So is it
comp.
even worth, should I just show up with my driver's license and the address and be like, would you lend to me? Because
No,
they're going to
no.
do all the work anyways, right?
No, no, exactly. But it helps from your end also as an investor. You've got to know how to do your numbers. And
Yeah.
I learned that as an investor, unfortunately, sometimes the hard way. And that's one of the things I bring to my clients, especially if they're new. I hold their hand and I try to tell them the same lessons I learned as an investor so they don't step in the same pothole. That's one of the value adds that I bring to my clients, especially like I said, for first timers. Hold their hand
So
and I tell them, hey, this is
what are some common pitfalls that investors face when it comes to financing their real estate projects? How can they avoid those?
the common ones are the ARVs. ARVs. That's a big one. The example I gave you earlier is a classic one, where the guy gets a bunch of sold properties from his realtor, right? And not paying attention to the location of those comps.
The realtor's painting a nice picture for them so that they buy the property.
Right, right, right. And also getting good. Another pitfall I see is getting good rehab numbers. Well, what I recommend is talk to two or three contractors and have them give you an estimate of what it's going to take to rehab the property. So don't just settle for one. If you talk to a contractor, he might know what he's talking. He might seem like he knows what he's talking about. He might seem experienced, but it's good to have two or three so you can kind of get an idea of the rough numbers for uh for the rehab. So those are the things your ARV, your rehab, and surround yourself with good people. To surround yourself with a good realtor. Take the time to talk to people. Take the time to find the right people to put in your corner because in the end that's going to be worth their weight in gold.
And one of the things that I think we used to do a lot is that when we had our checklist for flipping properties, one of the final checklists after you've done your comp matrix and all the stuff was lender hesitation. Are you getting lender hesitation and why? And so what's really great about that is you can do all the work and get really excited, but then the lender says no, and that's probably going to save you. Don't get disappointed. You should be like thanking them because if you went to like your cousin, uncle, brother, aunt and told them the same story you're telling yourself and then get their money into the deal because they're not looking at the comps are on the other side of the freeway, you could get yourself into a real corner. You might as well send every deal that you're doing through a hard money lender, see if they'll loan on it and be like, nah, thanks for checking the
Yeah.
paperwork.
No, and you make a great point there, Bryce, that if a lender says no, definitely be grateful because there's nothing worse than getting stuck with a bad deal. One bad deal can wipe out three or
And
four successful flips. Absolutely be grateful that you get a denial. It'll
mhm.
save you.
It's going to save you time, more importantly than money, because
Yes,
you're going to
sir.
invest 6 months into flipping something that didn't have a chance from the beginning, didn't have a chance
Yeah.
to make money right off the get-go. When you're looking at, I mean, other than credit score and the ARV, what's another reason someone might not get their loan through you guys?
We're able to place a lot of, like I mentioned to you, Bryce, we have sources, right?
Mhm.
If this one lender denies because, or if we're unable to use this lender because of credit score, we can always go to somebody else. And if we have a borrower that's willing to do what it takes, we will find the loan for him, right?
You just might not
So
like the interest rate as much as the first loan.
what was that now?
Well, I found myself that you can always get the money, you just might not like the terms. I've seen some crazy notes where people are putting down like side money and there's like a crazy repayment and but you can always find the money. It's just whether or not you like the terms of the deal. And
Right.
if you get if you get rejected, let's say I'm an investor and maybe I'm new to investing, and that's why I'm in investing because my credit's a mess or whatever. Should I bring somebody else to the table for their credit score, et cetera? Is like that stuff that you help people? How do you navigate the rejection on a
Right.
hard money loan? And how do you have that conversation? What do you do for your clients?
Again, it's all about education. When I speak with my client, and depending on the reason for their rejection, I can say you were rejected for this reason. Here is our option B and C, right?
Hmm.
Like you said, Bryce, if it's a bad credit score, can you find somebody else that can joint venture with you who maybe has a 700 credit score, and
Hmm.
then just make it happen, and then we'll build your credit score on the next two or three flips. Then you can do it on your own. Or we can go to lender C, who will take your credit score the way it stands, except you'll be bringing in more money to the table, right? We go through the options. Like I said, if we have a borrower who is willing to do what it takes, we can find a loan for him. It's just sometimes the clock runs out. Clock
Yeah,
the time
the
runs
offer
out.
date doesn't wait.
Just like in any basketball game, you've only got it's a 48-minute game, and once that's done, it's done, right?
Well, if you're creative and you dialogue with the transaction coordinator and the lawyers, you can sometimes buy a few extra days. You can
Yeah, you
make it
can.
happen. I've
Yes.
bought in 15 days before. But
Okay.
really you have to usually put down more money, right? Extend the deposit and show them that you're intending to close. If people want to connect with you, they want to find out more, they want to get access to your lenders and things like that.
Mhm.
What should they do? How do they find you?
Sure, Bryce. I can give you my phone number, which is 707-652-3193, 707-652-3193. They can also reach me at Edwil, Edwil, at rfsfunding.com, RFS Romeo Frank Sierra funding.com.
Awesome, awesome. Well, I really appreciate you stopping by and breaking down some of the walls around the hard money lending because it people think that they got to do this, that, and the other, but there's always hard money lending out there, guys. I can't emphasize that enough.
Yes, there is. Look forward to helping you guys out.
No problem. I appreciate you stopping by.
No, thank you.
All right. Until next time, guys, we'll catch you on the next episode.